After a sharp decline in Tesla stock, people want to know, is Tesla a good long-term investment at these prices? The company has been caught in a cycle of bad news which has negatively impacted the stock and caused investors, analysts, fans, detractors to wonder about the future of Tesla. When we think of Tesla as a company, there's a lot to be excited about. The electric vehicles, the solar roof, and Elon Musk as the captain guiding the ship. However, underneath the glamour of electric semi-trucks and new roadsters, Tesla has its problems. It's not a laundry list of problems, but we've identified 4 issues that we consider to be major headwinds for Tesla. So what are the issues plaguing Tesla? The 4 we've isolated are debt, delays, a changing political environment, and competition. These issues aren't exclusive to Tesla. Every business deals with these issues. But in Tesla's case, these have become very serious issues, as we'll explain. First, the debt. From the perspective of revenue growth, Tesla is everything an investor would want. The company has grown from $2 billion in revenue in 2013 to $11.7 billion in revenue in 2017. Although, as revenue has grown, so have the losses. Net losses in 2013 were $74 million, and in 2017, the company reported a loss of $1.2 billion. When companies are making money, revenue, but unable to turn the revenue into profits, they tap the capital markets for more money, and the capital markets have been kind to Tesla in the past. In 2013, the company's total debt was $607 million. In 2017, the company reported $10.3 billion in debt, and it has recently raised another $546 million by selling auto leased-backed bonds. With the recent issues at Tesla, some analysts have speculated that Tesla will find it hard to borrow money in the future if they need it. If this is the case, it really puts the pressure on Tesla to become profitable sooner than later. Elon Musk recently stated the company will not require an equity or debt raise this year, which is a good thing because the company's credit rating was just downgraded from B2 to B3. However, some analysts have inferred that in order for Tesla to start production of its Model Y, which is yet to be officially announced, and its semi-truck, it will need to raise capital. Even without a capital raise, the rising 3-month LIBOR rate could hurt Tesla's financials moving forward. The increasing 3-month LIBOR rate will have an impact on current Tesla debt with adjustable rates. Second, the delays. Tesla was late to confirm rumors from insiders that it did stop production on the Model 3 for about a week in February. This was just another step back in a series of setbacks for Tesla. Tesla's initial production goal was 20,000 vehicles a month by the end of 2017, but the company was unable to meet this goal and now has revised the goal to 10,000 Model 3s per month by June 2018. The company states that the shutdown in February was a planned shutdown to improve automation and systematically address a bottleneck in orders to increase production rate, and it may have worked. The company was able to close the last week of the quarter out with 2,000 Model 3s produced. However, this isn't the only delay Tesla has had to deal with. The company had delays at its Gigafactory, which Elon Musk described as production hell. As for the reason for the delays, former and current employees have come out that flawed parts are the cause for the delays in the Model 3 production. But delays aren't anything new to Tesla. The Model X experienced delivery delays due to parts shortage, but the Model 3 was supposed to be different. The reason why the recent delays have been such a big issue for Tesla and investors is because the Model 3 was supposed to be the car that Tesla used to show the world that they had worked out all of their kinks. If Tesla was able to meet their initial goal of 20,000 Model 3s per month, it would have shown the world that Tesla wasn't a tech company playing with cars, but a real car company. Third issue we identified with Tesla, the changing environment. One of the benefits of buying an EV was/is the tax benefit that many states and countries hand out, but this seems to be coming to an end. In the United States, once Tesla sells 200,000 vehicles, the tax credit drops from $7,500 to $3,750. Tesla has stated they plan to hit the 200,000 mark in 2018. What makes this an issue in the US is that the rebate only applies to delivered vehicles. With delays plaguing the Model 3, the company could hit the 200,000 vehicles sold mark with the Model X and Model S before delivering Model 3s to buyers who were counting on that $7,500 rebate. In Canada's updated EV incentive program, vehicles over $75,000 are no longer eligible for a tax rebate. Is this a major deal for Tesla? It could be. It would not be unreasonable for a customer who planned to make a purchase with a $7,500 rebate to cancel that purchase if the rebate no longer applied. Since Tesla won't hit the 200,000 vehicles delivered until later in the year, we'll have to wait and see what the reaction will be from those consumers who will no longer be eligible for the $7,500 rebate. The fourth issue identified, the competition. Tesla has revolutionized EVs in the auto industry. Not only does the company make EVs, they make good-looking EVs. It was easy for Tesla to stand out in a field of few EVs, but things are changing. Almost every car company is getting into the EV market. market. GM has the Chevy Volt, Nissan has the Leaf, Toyota announced by 2025 all Toyota and Lexus models will have an electric option. Ford announced plans to invest $11 billion to create 40 electric vehicles by 2022. Volvo announced it will go all electric come 2019. BMW introduced its first all-electric vehicle, the i3. Mercedes plans to offer electric versions of all their car models by 2020. The bottom line is the field is getting crowded. Tesla does have experience and know-how on their side since they've been doing the EV thing for quite some time, but an investor shouldn't put too much stock into Tesla's experience over its competitors. Companies like Ford or Mercedes can spend billions of dollars on R&D and incubate an idea or electric vehicle and still keep the lights on at the company with their current offering of cars. While companies like Ford and Mercedes are a few years away from releasing their EVs, when they do, they could hit the ground running without the production delays, delivery delays, and cash constraints that have plagued Tesla. According to Statista, 81 million cars were sold worldwide in 2017. Tesla produced 100,000 vehicles in 2017, which is less than 1% of the worldwide auto sales in 2017. The optimistic Tesla investor points out that if the company is able to secure 1% of the auto sales in the near future, the stock at this price could be a steal. But this puts Tesla on another clock. This time the race is to grab 1% of the market before their competitors' EVs hit the market. Gaining that 1% will become even more difficult if Tesla can't get its production process streamlined by the time new EVs begin to enter the market. Tesla has had a tough go at it when competing against time and delivery schedule. How will they fare when companies that have decades of experience manufacturing automobiles enter the market and consumers have other options? Then there's the question mark. Elon Musk. Elon Musk, the man driving the Tesla bus, has been a visionary, a rock star, and a CEO. He's been able to accomplish things with Tesla that people thought were decades away, and his rock star status was evident when he was able to sell out 20,000 flamethrowers at $500 a piece. Who said to themselves that a $500 flamethrower is what they needed before Elon Musk debuted a $500 flamethrower? His ability to be a focused CEO, however, may be why Tesla's had the issues that it has had. There's no denying that Elon Musk is a brilliant individual, but even the smartest individuals can be stretched too far. Aside from Tesla, Elon Musk is overseeing SpaceX, SolarCity, Hyperloop, OpenAI, and Neuralink. With a mind as brilliant as Elon Musk, it's easy to wonder how much further along could Tesla be if the car company had his full attention. And within Tesla, could the recent delays have been avoided if all the company's focus was on production of the Model X, Model S, and Model 3? At the Model 3 unveil in November, Tesla showcased its semi-truck and new Roadster. This was another situation where many wondered if Tesla as a company would have been better focusing all of its attention on the production of the Model 3 before premiering their next model of cars. Recently, Elon Musk has stated that he's back to sleeping at the factory. Hopefully, he'll be able to work out the kinks so the company can hit the revised goal of 2,500 Model 3s produced a week. Currently, Tesla finds itself in a very bad news cycle, and there are so many issues at the company that the stories just keep coming. Will the company ever emerge out of the bad news cycle? And if so, where will the stock price be when it does? The decision to invest in Tesla or to avoid it altogether is a matter of an investor's perspective. When compared to Ford or GM, Tesla is an overvalued car company. However, when compared to other Silicon Valley tech startups in the past and present, Tesla's doing what they should be doing, which is growing revenue rapidly. As it stands, we believe Tesla is a risky investment. The debt, the delays, the changing environment, the competition, the lack of focus, it's all enough to make us want to put our money elsewhere. But at the current price, with the company's current set of issues, this may be the time for the investment. The riskier the investment, the better the reward. And if you believe that you buy when there's blood on the street, Tesla has a lot of blood on the street. If you're a true believer in the Elon Musk dream for Tesla, this may be an opportune time for an investment with the stock close to or below the $300 level. For the more conservative preservation of capital over everything investor, this may be an investment to pass on. So what do you think is Tesla as an investment? Is it a good investment? Is it a bad investment? Do you think the company will make it out of 2018? Do you think it'll go bankrupt like many are stating? Let us know in the comments below. To stay up to date with the Silver Report's research and articles, check out silverreport.com. Leave us your email. You'll be notified anytime we post something new. Thank you for watching. May your next investment be your best investment.